Welcome to the Trader Merlin Show with your host, Merlin Rothfeld.
Hello everybody, welcome to Trader Merlin. A little bit of a different show out there today. This might be our final one in our studio out here today as I make the transition going over to a new studio out there, so hopefully you guys are enjoying today's show. It should be an interesting one. We're going to have a great guest on the program. We're going to have Tillie Allison on the program here in just a little bit. And she hasn't been on this program as Trader Merlin, so it'll be an interesting one. We'll go through a little bit of a profile, understanding how Tillie got into this, what her strengths and weaknesses are, things that she's learned along the way. So pretty excited to have Tillie on the show today. Now, if you were following along at home as these markets progress today, one hell of a trading session again. A lot of major market moves, especially with crude oil. I was happy to let you guys know yesterday I bailed on 60% of my crude oil. I actually bought back in today as well, bought back in some more, just around that $25 mark. So in disclosure of my position, should anybody want to know. Yeah, it does have a little audio is just a little bit off there. I think we're peaking a little bit, guys. Not sure where that one's coming from. So hopefully it sounds a little bit better now. Hello, Linja, Brendan, Trent, AVP, Eric, Ivan, Jorge, Ruben. Oh, we got a bigger crowd than normal. Boss Poopa, hello. Good to have you guys here. Yes, Jorge says portfolio management, what I need right now. Absolutely. Tillie will be enlightening us because that's one of her areas of strength. So hopefully we can get some good content from that one. All right, let's start you off with a market update, a little bit of a rundown of what happened out there today. And of course, as I like to do, go through our top 7 markets because there was an interesting one out there. For those who, again, were watching the shows over the past couple days, crude oil has been obviously one of the major market movers. For myself, I'm thinking that anything down around that $25 mark is probably a good long-term buy. We will start things off with crude oil. We have Gary running the show today as TJ is on quarantine up in his home, so can't make it down. There we go. Tillie is not going to buy crypto, I assure you of that. Here we go with your crude oil chart. You can see some old lines on this, which I can now effectively remove. While the candles don't look that big or that significant, there was certainly a major move down today to the tune of 21.33% on crude oil today alone. Now, as I mentioned, I actually bailed out of 60%. I had 5 futures contracts on CL, so I was very fortunate to get out when I did. Now I'm looking at, I'm back in 5 now as we speak, so hopefully we'll see how this one pans out in the next little bit. But right now, crude oil, pretty ugly on the day. You are trading right now at 23.51, so it's continuing to drop. I could bring up your 5-minute time frame here so you guys can see it's been really, it got really butchered in this sell-off here. This was a massive move in crude oil from 25 all the way down to 22. So over a 10% move in a period of 20 minutes. Pretty unbelievable out there for crude oil. Anyway, that was your number 7. Number 6, Treasury yields. Again, we'll go to that ZN futures product. They were down 16.18% on the session, making the bonds a very brutalized instrument today. I guess futures traders are loving this because there's so much opportunity in the futures. Brendan says crude oil could hit 17. Yeah, of course, it could hit 17. It could hit 60. Nobody knows exactly where. I have a hypothesis, which I'll tell you after I get past this and get Tillie on the phone. All right, let's go to S&P 500. We had a 4% down move out there today in the S&P 500, finishing the day at 2303, and we are down even more in our after-hours session right now. We're at 2,262, so the slide continuing. It was an aggressive end-of-day sell-off there for that S&P 500. Russell 2000, still above the 1,000 mark. It's at 1,014 on the day. That brought us down 4.22% for the Russell, still shy of the podium. All right, let's go to your NASDAQ 100. There you go. Here's the NQs. Huge range. Volatility was one of the more interesting things about the NQ today. The composite was down 3.79%, finishing at 6,879. Okay, Brendan's probably happy about this one. We had Bitcoin today with a nice showing. I don't have that chart ready for you, but I'll get Gary to bring that one up for me because he's always Johnny on the spot. We'll go to Coinbase for that one, Gary. Perfect. And we'll go to prices and click on Bitcoin because Bitcoin, well, had some interesting moves today. It's still in the big down percentage category. It was up just a minute ago at 6,100 plus. Now that I bring it up, of course, on the show live, it's at 6,025, so not the best showing, down 4.55%, which actually would put this down in like 4th place now. How quickly things change in the crypto world. All right, number one, and actually the only one showing a nice positive day out there was gold. Here is your GC on the session. Gold slightly just eking out a gain of 0.72%, closing at 1,490. It's actually up another $10 since I took those readings. So that is where we go for today. Yeah, I know the sound is kind of wonky, guys. My apologies for that one, but we will do the best we can to wade through it all. All right, I don't want to keep our guest on the phone any longer. We've had her on the program many times over Power Trading Radio's almost 10-year history. Tillie Allison has been on that program many times. Initially, she was one of the regular hosts on the program. But since this is a new program with Trader Merlin, we want to do something a little bit different and start off with Trader Profile. It's one of those things we like to do where we'll go and show a profile and understand a little bit about our guest that's going to be on the program today. So without further ado, I believe we have Tillie Allison on the line from Kansas City. Tillie, how you doing?
I'm very well, Merlin. I'm enjoying being inside, and it's a beautiful day outside, and we're not quarantined or anything in our homes, but a lot of people are taking extra precautions, and, there's still some people out enjoying the cold day, but it's nice and sunny, so doing the best we can.
Are you practicing your social distancing, Tillie?
Very much so, doing the elbow, bump thing and things like that.
It's funny when you look at the culture at Online Trading Academy. One of the main things we loved about the culture was everybody hugged everybody. It's one of those things I'm sure was an HR department's nightmare. Like everybody was hugging all the time, but now it's like, oh, you can't even hug anybody anymore. This is terrible. Cool. So do me a favor. Walk us through. Pretend you've never been on this show before. You're going out on a maiden voyage on a program, and they're asking you, tell us a little bit about yourself so that our viewers can understand how you got into this, what asset classes you trade, and really what is your primary focus or specialty in the markets?
Okay, yeah, absolutely, Merlin. So I think the time in my life when I began to see that in kind of the world that we live in, there's my dad said one year we couldn't go on a summer vacation because the gasoline was too, in a few choice words, too expensive. And I said, well, Dad, why can't we just go to the refinery right there that we can see from the backyard and get some gas where, don't they make it in the refinery? And he said, oh, in a few choice words, that just ain't the way the world works. And from that point on, I kind of started to notice that there was, a price that we always had to pay, as consumers. And then, though, as manufacturers, kind of, the fact that there was a whole lot of profit being made in a lot of different products. Mm-hmm. And it wasn't just crude oil. It was in groceries and clothes and everything. And then I got a little bit older, and I was a teenager, graduated from high school, and I got a letter from the Social Security Administration denying me my benefits, that I would no longer receive survivor benefits to go to college. And I kind of just, took a real, kind of a, it was very shocking. I was very devastated. Sure. I'd received Social Security for like 15 years. And really the question was, how is it that you could provide Social Security benefits and then all of a sudden just stop? Kind of the question of, how does the system work? How does the system provide benefits? Where does the money come from? How does this work? And kind of, I guess, my goal in life was to never be dependent upon anything like Social Security and to understand how it works. And so whenever I started to learn about investing and putting money in stock market, again, that whole, situation of, well, how are you going to buy it cheap? You can't go to the refinery to buy it, but how do you buy stocks cheap? How do you invest in treasuries cheap? Kind of where's and how does that work? So that's really what inspired me to learn more about portfolio management and all the different products that are in the system. So I think just my burning desire to understand the system itself, and, like any other industry, people in health and wellness, right? They dive in deep to understanding health and wellness. People who love cars, they know cars inside out. People who love to cook, they just know that industry inside out and upside down. And that's kind of the way I got interested in the financial markets.
Right, and you've traded almost every asset class out there. I know that when I first met you, you were really active. You were really active with the future side of things. And then you progressed and you started doing individual securities. You started doing ETFs, portfolio stuff. You were also looking at forex and options. So, what I would say, because I know that you really focus on portfolio stuff and longer-term wealth management. But what about those different asset classes appeal to you? And is there any one that you like better than the other?
I think that all products have a unique place in a portfolio, and it's amazing that products like stocks and futures, crude oil, currencies, all these markets can either appreciate in value or depreciate in value. And in finding a place in the portfolio, to be able to position long or offset losses, possibly even short in a bear market, I think that's why it's necessary to have so many different products, because environmental conditions, it's like having a garage, and if you only have one car in the garage and it's a, sports car, and then it's, snowing outside and you got 4 feet of snow, how's that going to work out? So, kind of like right now, the market down 30-something%. If everyone's just long stock, how's it going to work out? They're going to keep saving and putting money in stocks, and it's going to all average out, and they might end up with a, net 7% after, a few decades of investing.
Right. Gotta love that. All right, so you actually went and got credentials, right? Are you a CFP?
I do not practice as a CFP. I've completed my program requirements, and I chose not to practice because I have not found a company likely to and likely one day to have my own company. But I never had an opportunity to really find a company that I felt comfortable with. And so many CFPs practice with a team of other, specialists and investment advisors and estate planning specialists and attorneys and things. So since I specialize in investor education, and I enjoy doing that so very much, I do see that at one point in my life I will practice as a CFP and likely have a registered investment advisor's license and some other things as well. But that's just not something I plan to do a little later in life.
Down the road. All right, let's summarize here so we can get that all kind of under wraps with regards to profile. And Gary, you want to come back to me real quick? When you're looking at Tillie's profile, she started off trading futures and equities, had an interest in longer-term portfolio stuff and really saying, how can I make sure I not only preserve my wealth, but help grow it along the way? So she's had this ability to use all these different asset classes, really with a focus on longer-term capital appreciation and money management. Now, later on, time permitting, we'll talk to you about her potentially upcoming document publication. I'll leave it there. I don't want to let the cat out of the bag too much, but Tillie's got a publication that we want to talk about. But I want to get to the point, since we talked on the tile and our clickbait out there for all the viewers out at home, was talking about portfolio management. So we are in a situation right now where, and by the way, this was no longer under the Power Trading Radio handle, so you don't have to worry about saying choice words. If you want to say things like bullshit or damn it or son of a, you can say that. Feel free to go ahead and let out. Try not to drop the F-bomb out there. Some people might not like that one, but we're in a market where a lot of people are going, oh my God, what the hell is happening? And they're freaking out. So we've done shows on, how to capitalize on the coronavirus. We've done plenty of shows in the past on becoming bearish in the marketplace. But most people, with regards to portfolio management, are not going to be thinking about shorting. It's just outside the realm of what normal investors do. So walk us through what someone should be thinking at this present moment. Market's down 30%. Everything seems to be going to hell in a handbasket. I mean, we're almost, like I made the joke yesterday, but it could actually be there where we might start seeing tanks roll down the street enforcing this stay home thing. California, we have the entire state now locked down. What should somebody from a portfolio perspective be thinking at this moment?
That all market conditions in this environment can be very, I think, cause people to be very concerned. I think the concern is for the individual and our lifestyle being negatively impacted in our health. But as far as the stock market, and whenever prices are down 30% or down 50%, these are companies that have taken a big hit recently because of a catastrophic situation.
Right.
And these companies are designed to manage this situation. So odds are over time that these companies will have insurance policies and other sources of revenue to come in to help stabilize their share price. And that as the situation stabilizes and the economy again begins to thrive, we're in one of these boom bust cycles. And so right now we're in a bust, market down 30%, down 50%. And if one did have an opportunity to invest when the market is down off of the highs at 30%, if it even drops 50%, if it did drop 70%, that would be devastating for most investors.
Right.
But for many individuals, having some cash available to buy at those bargain basement prices. That's what a long-term investor's dream is, to be able to buy a stock 30 to 50% discount.
Right. Now, you back in our at the end of last year, even earlier this year, when we were talking about the markets and where it had gone, kind of where it was at, you had mentioned several times that, look, longer-term investors should be kind of lightening up their portfolio and going to cash based off that market situation. So I guess we could look at it from the perspective of somebody longer-term that didn't get out or didn't heed that advice is obviously in a position now that they're screwed because they don't have the capital to buy back in. You and I were talking earlier, and you're saying, look, I'm looking to buy at these pullback points for the long term, right?
Yeah, absolutely. And, I know it's so hard because, someone who's just seeing this for the first time, you and I have both seen the cycle, a few times. And, the first time you typically see it, you're kind of caught, shocked and maybe didn't plan for it. And you get more comfortable as you have been investing and trading longer.
Right.
And then so someone who didn't set some capital aside for this opportunity, is kind of like, a real estate investor that wants to buy property, but it's too expensive. And then, all of a sudden you have, whether it's a pandemic or anything to affect that market, that opportunity. So, yeah, proper planning in most business situations pays very well. What is that? If you fail to plan, you can plan to
fail. Bring it on.
Fail, right on. And so, the first time this happens, it's kind of sad. But I think that anyone out there can maybe take an opportunity right now to say, hey, I didn't plan accordingly, but what can I do right now at these prices? Mm-hmm. Maybe they have a little money, set away somewhere that's not in their long-term investments getting hit 30 or 40% right now, where they might consider, hey, I didn't get to do it in that account, but, maybe have another account that they could consider, possibly start investing.
So two things. How do you establish those levels? So, you mentioned that somebody who's looking at a portfolio management perspective, I think that everybody should be a little bit more proactive than they are being. I have dealt with at least a dozen friends in the past 6 months who have sent me comments and questions, what should I be thinking with my 401ks or my IRAs? And my answer has been the same for the past 6 months, which is you should be really lightening your portfolio. You should be getting out of a lot of your positions or hedging those with options just in case this thing has a rollover moment. Yes, I've been talking about that for a long time. And finally, the chickens came home to roost, even if broken clock is right, twice a day.
Twice a day.
Yeah, twice a day. But you have a situation now where you are very astute. You knew that there was something coming because the market action was just a little too irrational. You went to cash, and now you are setting buy points in, saying, all right, if the market drops X, I'm looking to buy. And if it drops even further, I'm looking to buy. How do you establish those points from a buy-in perspective? Because a lot of people think right now is the buy-in moment. I argue that that's going to be in April.
Okay. Well, first of all, much of the portfolio that I, deal with, IRAs and things like that, they're not in an account that is, one would have to, really think about as the market had been appreciating over time, earning income all the way up and using some options in some accounts on the way up to earn a little bit more. Mm-hmm. But at this time, there are still long positions that have been long for years. So the capital that has been used to allocate into the market was capital set aside. And, a lot of the positions that have been long the market, a percentage of them are still long the market. But, you have to, really, think about, the longer term one invest and the, cheaper prices were back in 2009 when the S&P 500 was at $67 a share, mm-hmm. The market could drop literally 50%. And investors that have been longer term, they're still up, if you will, from their, whenever they invested originally, wherever they began to invest in 2013, 14, or 15. So, whenever we look at it, the market falling 30%, if it falls 50%, what does that look like?
Right.
And does one have money available to allocate? And then, what would their, average cost be for trying to establish a position at those prices?
Mm-hmm. I think, and there's a question that came in here from Jorge. He says, I went to cash with my 401k looking to invest at a better time. And this, I think, from what I'm gathering from Tillie, is it's a matter of each person needs to come up with what their idea of when to buy into the market is. So, there's a lot of people that think, hey, we're off 30%. if I'm thinking of holding for the next 3, 4, 5, 10 years, hey, this is a pretty good discount. I personally think that there's going to be a lot more pain. But here's the challenge here, Jorge and others. Let's say, for example, that Jorge, who's just mentioned he went to cash and he's looking to buy at a better time. What if he says, you know what, this is the better time, 30% discount off the highs, I'm happy here, I'm buying all back in with my 401k. And let's say I don't, but this was the market bottom, and all of a sudden the market starts to rally. Jorge's going to be loving it because he got a 30% discount, and now he's capitalizing on upside move. I'm still left in cash waiting. So there's this risk-reward part that you have to find out what's really best for you. One thing that Tillie and I talked about earlier is this kind of a concept of scaling back into the market. And maybe, Jorge, for you right now, maybe say, let's say you've got all your cash, and you say, I'm going to maybe buy 20% of that in the market right now. And every time it drops maybe another 10%, I'll buy back in until I'm fully allocated in the market. That may be a tactic for you, but catching the falling knife right now is a very dangerous thing because we're dealing with something we've never seen before, and that makes this a very scary environment.
Absolutely. And realizing that we are in so-called longer term, even though we consider it trading because we have an exit strategy, there is the element of investing where we have to allow the market enough time. And, in a situation like this, we don't know how much time it's going to take for the stability and all the different factors. I love how you had on the show, maybe it was yesterday, where you list the different conditions that are going to help the market stabilize.
Right, the different types of bottoms. Yes, we always like talking about bottoms here on the show.
Right on, and so whenever we think about when this market does stabilize, it's not a question of if, it's when.
Right.
That's the way the system is designed. So again, going back to my interest in, the financial markets and the way that the system is designed, the whole banking system and the global banking system will do everything that possibly can be done, and then they'll make up things that need to be made up to make this market, stabilize. The Federal Reserve banking system, corporations, investors, I don't think Warren Buffett and other multi-billion-dollar investors are going to, just simply sit back and watch the market, trade, say, below 50%. Mm-hmm. At that point, it starts to negatively impact so much corporate wealth. And at that point, just like in 2009, Warren Buffett himself stepped in and literally bought enough stock indexes globally, 4 of them, using options to stabilize the market, because if he steps in and other investors step in, there's enough money flow to create that bottom.
Yeah, and the tricky part is, and we talked about this yesterday, and we talked about different market bottoms, was what are we looking for? What are the components that could add or help facilitate that bottom? And most viewers know I'm a skeptic. I'm a cynic on the markets. I think everybody out there is trying to take your money. But you need to look at the people that are influencing the flow of money. And right now, you have a situation where the Fed has been super, super, super aggressive with regards to rates. And we all know that should act as a catalyst for markets to move to the upside. However, was it done at the right time, and will it have the desired effect? I think until we can all go out of our homes and go back to our day-to-day normal lives, that's still to be seen. Let me ask you this one from a portfolio management perspective, Tillie. There are now analysts and experts in the industry coming out and saying we are going to see massive unemployment numbers. The number that I was hearing from, I think it was Goldman Sachs, said you're looking at 6% on the next reading. Mind you, we're at 3.5 right now. 6% unemployment next month, and then as high as 24% the month after that. Does that at all change your perspective on a portfolio? I mean, if we're in a situation where unemployment in, let's say, 3 to 6 months could go from 3.5% to 24%, does that change your perspective of your buy points and say maybe I'll hold off a little bit longer, or does it still stay the course?
Okay, that's a great question. And the stock market is already pricing that in.
Right, that's true.
So, yeah, the stock market, these big portfolio managers, Goldman Sachs, Bank of America, UBS, they're pricing all that in, and that's why they're selling so aggressively to create revenue right now so that they'll be able to do business. And should a lot of their facilities not be functioning, they've got enough money to be able to manage things. But the consumers are going to suffer more. So the stock market typically leads the economy, and so therefore those numbers that come out, 3-6 months trailing, have been typically priced into the market. And although there could be another downswing, because remember, portfolio managers, one of the biggest flaws in the system is that many portfolio managers are still using reports and economic data and can oftentimes take action with those kinds of reports, causing consumers and 401k investors to have portfolios that don't perform very well.
Mm-hmm.
So if those money managers are reacting to that delayed, flawed data, that can cause retail investors to not be able to invest at good times when prices are low, and waiting for the economic data, waiting for employment to be strong again. By the time employment data is strong again, where's the S&P 500 going to be?
It's already
It's
moving
going to be up 50%
Yeah.
again.
Yep. Big
So
time.
we really have to focus on the market, and that all those factors are already priced in.
Absolutely. Natalia says, Tillie was just speaking about how Buffett stepped in at the bottom of the last crisis. Here's the issue again. As Tillie was just mentioning, a lot of the economic data is lagging, right? It can be for months old, and it takes time for that data to filter through to see actual results in the economy. When you look at what Warren Buffett is doing, I would encourage you guys to be very careful with that, because he's managing a fund, and they report quarterly. So basically, if you're getting any information that's transparent at all from Mr. Buffett, which I still question that as well, it's going to be very lagging. However, let's say, for example, it's shown up in his portfolio that Warren Buffett, like he did back in 2009, made a huge buy-in to Bank of America. It gave them all kinds. He got preferred stock, he got all kinds of options and warrants on it, and he really, for $5. When he went all in on Bank of America back then, it should have been one of those things where he said, well, look, he's arguably one of the greatest investors of all time, and this guy basically just put his chips in and said, I'm going all in on Bank of America. Now, I personally did not jump on it because I was watching and just waiting to see what would happen, but that should have been a sign. Even though you got that information 3 or 4 months later, it took a while for Bank of America to rally, but it rallied significantly from there. So it's hard to find exactly when they buy. A lot of times you can see it on a price chart, but that information can be useful. And the further and farther we slide, like if we get to those points where we're maybe down 70 or 80% of this equity market, and you hear that Buffett just went all in on, I don't care what company it is, you might want to follow suit.
Marlin, as you mentioned, the charts usually, and I would say that what we see on the chart is then oftentimes validated with news.
Mm-hmm.
So charts move first, news happens later. But institutional buying can be very, very subtle. So unless one has a trained eye and they're really tracking, prices off of the lows and measuring them weekly, might see that subtle accumulation, which then results in the rallies. But yeah, by the time typically it makes it to the news, you can either have two impacts. You can either have an impact that it's very bullish, or you can have a more subtle, impact. Just depending on kind of. Also remember that when someone's buying, I know you know this, and our listeners have to always remember this. When someone's out there buying something, there's always someone out there selling it too.
Right.
So you got to keep that in mind always, especially if it's in the news.
And as Tillie mentions that, let me just real quickly go through one of the funniest skits that Saturday Night Live has ever done. Yes,
Right?
when Saturday Night Live was actually funny. They did a skit years ago where and this was in the 2009, I think it actually maybe before 2009, may have been like the 2000 crash. They had an investment advisor sitting in a room talking to all their clients, and he's saying, we're doing this and blah, 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 blah. And he was saying, we were selling out of our positions and doing this as the markets were crashing. And the one woman raises her hand from the back, and she says, well, excuse me, but if you were telling... if you were selling out of your positions, why were you telling us to buy those positions and calling us on the phone saying we should buy these positions? And the advisor goes, well, if you believe like we do that the market was headed for a significant correction, you have to find somebody out there to buy it. It just makes common sense. And to me, that is the epitome of what this is all about. And this is why I'm such an anti-institutional guy, because I believe they're always trying to shove stuff down your throats and force you to buy something that you might not want to buy. You can probably find that video on YouTube. I'll see if I can find it and post it for you. One last question here. I'm going to bring up some charts here. TLT and different bond funds have been extremely important from a long-term investor's perspective. 2 questions came in here. One was, Big Eb's at Occidental Petroleum. Man, he got beat on that one. Where was the one about bonds? There were 2 questions that came in here about bonds. Natalia says, would treasuries be a good option nowish? And Jorge says, are bonds a good option? What do you say to that? Because I know when you went through and got your education on being a financial advisor, that there was a tremendous amount of interest in bonds, especially for the older generations. Has that changed? Because the volatility in bonds right now seems to be something that could just eviscerate a portfolio.
Well, products that most people think about when they think like bonds are like kind of mysterious, like James Bond.
Yeah.
So we really have to figure out, it's seriously. So when people say bonds, there's an entire universe of bonds. So there are traditional bonds that if we look for a fixed income ladder, maybe I know it's not a very high rate of return, but getting 2% on cash is better than 1%. So bond ladders can, oftentimes earn, depending on the time frame, 2 to 3%. And, that's just generally speaking on, shorter term bond ladder. And then, of course, in corporate bonds, companies that are needing to borrow money, corporate bonds, depending on their rating and the company it is, can pay much higher corporate rates, ranging from 6%, oftentimes up to 20%. But of course, the higher the interest, the higher the risk the company typically is. And bond issuers are always paid the percentage there. There's a, coupon rate, and then there's kind of an assessment of worst case scenario. I forget the term. But the world of bonds, is so broad and big that one needs to really understand exactly what kind of bond it is. And when people look at price charts, typically those are treasury products like TLT and the other ones that are very popular.
Right.
But those, which one?
SHY?
Yeah, SHY. So those are traditional type treasury bonds, but you're looking at the price chart, which typically moves opposite of the yield. So when one says, I want to invest in bonds, they need to be very, very careful, because if they're choosing that bond through their traditional broker, they're getting bond yields, not what they're seeing on the price chart.
Right.
It's the opposite. So, if someone's going to use the price charts, we have to analyze it using, strategy where we're looking to buy low when things are cheap and sell it when things are expensive. But if you're looking at and thinking about just, a bond fund that you're thinking about, that's just the bond yield that's paid for that product. So
the
completely
scary part,
different product.
Totally, it's totally different. And I think what's scary about it, and I hear the audience right now, Big Ed saying run from bonds, Ruben saying that Sam loves bonds, cool. And probably because there's volatility in them right now. And this is what the new normal. It used to be the bonds were extremely stable, you got a nice income check, and for someone who's retiring, that's what you want, right? Is that income stream that's predictable. Nowadays,
4% right now is better than losing 30.
Yeah. Yes, that's true. Tillie, I want to go we're already long beyond our show time here. I'm told I got 30 minutes, and I want to give you a chance to talk a little bit about your publication. Tell our viewers a little bit about your publication. I'm not going to tell them what it is. That's for you. What is it? What do you got cooking?
Yes. So I have for many years found the Federal Reserve banking system more than interesting. Like so many of us, we live our life day to day. We pay interest, on loans and things. But whenever we really look at how the Federal Reserve banking system impacts the financial markets and how the entire system is engineered to so-called stabilize the banking system. So I do have publication in the works, and as soon as I get my cartoonist to finish some editing and come up with a few, icing on the cake, if you will, it is called The Fed Effect, and it will be primarily about how the Federal Reserve banking system really does cause these boom-bust cycles, and how our economy is really impacted directly by this very powerful organization.
Mm-hmm. Cool. Well, maybe when it's finally released, I'll get my autographed copy. Maybe if we're lucky, guys, I'll convince her to give some copies away for viewers out there. But yeah, it's about the Fed. You can sneer all you want. They have definitely provided some opportunities for all of us. Whether you love them or you hate them, they have certainly created boom-bust cycles in our markets, which, you know what, I'm going to look back in hindsight and say, I'm happy you created boom-bust cycles, because this cycle that's happening right now is a great opportunity for us to make money in these financial markets. Tillie, thank you so much for coming on the program today. I know you've been very busy driving around out there, and we appreciate it. Thanks you for all that you've done for us over the years, and I look forward to having you on again soon when we can actually be holding a copy of your book.
Awesome. Thank you, Merlin.
My pleasure. Good to
And,
talk to you.
hey, Ruben, and everyone else on the show today.
All right, yep. You got a pretty nice group out there. Everyone's been
Shout
pretty
out.
chatty. All right. Thank you, Tillie. Take care.
Fantastic. Bye.
All right. Tillie Allison's our guest today. I wanted to bring this one up when she was on the program, but I'm looking at the clock and we're long overdue. She mentioned James Bond talking about bonds, which I thought was kind of funny. And my argument was, right now we're in a situation where a lot of people are still historically using bonds as an anchor for their portfolio, as a way to generate income. And unfortunately, a lot of people who are retiring right now are getting absolutely screwed by holding bonds in their portfolio. And James Bond, if you will remember, the British secret agent man, he had a license to kill. And sometimes I'm looking at these bond charts right now and I'm thinking, boy, if you talk about a license to kill, be on the wrong side of these charts or these trends, and that could definitely kill your portfolio. Anyway, I wanted to throw that little stupid piece of humor out there. Brendan said something really interesting, which I thought was worthy of mentioning. And I think that part of what we have to do as investors and traders is understand that there are market dynamics that always change, whether that's your strategy, whether that's an economic cycle, a fundamental cycle. Everything is going to be constantly changing, which is why trading is such an amazing business. There is nothing that you will learn that will work 100% of the time, all of the time, which is why in classes we're always saying, look at things from different perspectives. Always be evaluating. Make sure you know what type of market environment that you are in. It's kind of like a military soldier, right? You are taught hand-to-hand combat, which is amazing, and you should learn hand-to-hand combat as a soldier. But what good is hand-to-hand combat when I'm standing 65 feet away from you and I have a rifle? I'm taking you out. So you need to know all the different weapons for each terrain or battle that we're facing. Right now is a very different battle. Ruben was talking about how he really wasn't a day trader, but right now, day trading is really the way to go. I mean, this is really a day trader's paradise out there. Now, Brendan said modern portfolio. That's the old-fashioned way. Equities, physical metals. You put crypto. Oh, sorry. Modern ones is what we're dealing with right now. I'm sorry. Equities, physical metals, cryptocurrencies. Yeah, it's interesting how different assets have come into it. I think that maybe the cryptocurrencies would have taken the place of precious metals years ago, which would have been like a 5% allocation. But there are different things that are coming up that we might want to allocate. I know some still would run away from cryptos. And classic portfolio theory was equities and bonds, period. The irony is that's what's available in most of your 401k programs. So important part is to start learning exactly how these markets operate and know how to deal with different market situations. Today we looked a little bit about portfolio management, and I think a lot of people need to take a long, hard look at your portfolio, whatever it is, and reallocate, rebalance, and start to adjust for whatever this market has been throwing at us. All right. I'm out of breath. There you guys go. Thank you so much. Yeah, I appreciate all that you guys have done and all the comments. You guys had so much conversation going. I am going to work on a way that I can read your questions a little bit easier as opposed to having to keep turning all the time. What I would recommend you guys do or encourage you to do is hit that like button, hit the subscribe button. That's the best way you guys can help us grow Trader Merlin. Also, on the iTunes podcast, if you go out there and you rate it, that'd be one of the best things, and subscribe that podcast as well. That will help us, and hopefully I can get this get some resources in so I can start to grow this and make it a little bit better for you. Again, thank you guys all for your participation. If you have any comments, questions, suggestions, or things you would like us to cover topic-wise, go to tradermerlin.com. You can simply click the little message button. Those messages will come to us here in the studio, and I will get to all of those individually, if not on the show, and hopefully make the show even better for you. Take care, everybody. We will see you on Monday.
The Trader Merlin Show is produced by Merlin Rothfeld, Gary Christmas, and TJ Writings. The show is engineered and edited by TJ Writings. For more information, visit tradermerlin.com.